When we are ready to retire, we must convert the growth of our savings and investments into a source of regular and reliable income, an income that will last for 20 or 30 years of retirement. Of course, most financial advisors will advise us to withdraw only the interest, dividends, or profit on our investments so that we can never run out of money. But we know that interest rates, stock dividends, and market valuations will vary considerably from year to year, especially over 20 or 30 years of retirement. And if our investment earnings cannot provide us with enough income, we will need to take withdrawals of both earnings and principal, and manage those withdrawals very carefully as we spend down our savings over 20 or 30 years. But if we make any miscalculations, or if our investments do not perform as well as we expect them to, or if we should live longer than 20 or 30 years, we could very easily run out of money. So what's the alternative? Well, we can convert our retirement savings into 3 separate 10-year payout periods, each one with a certain guaranteed income, and the third one with a guarantee to continue the payout for as long as we live, even if we live into our hundreds. These payout periods are referred to as income buckets, and they can replace the uncertainty of interest rates, stock dividends, bond yields, and market valuations with the certainty of a regular and reliable guaranteed monthly income. It's like having our own personal pension plan. What's more, income buckets enable us to safely and confidently take as much as 30% more income during the first 20 years of our retirement, because we know with certainty and assurance that we will have sufficient income guaranteed during the second 20 years of our retirement, or for as long as we live. What's more, we can do it all without any risk of taking out too much or too little, and without any dependence on interest rates, bond yields, stock dividends, or market valuations. So we never need to worry about the safety of our money, or the need to carefully manage our investments. Here's an example of how it works. The first income bucket might begin at age 60 or 65 and pay out all of that money over the first 10 years of our retirement before it would be replaced by the second income bucket. So the second income bucket would begin at age 70 or 75 and pay out a new monthly income, guaranteed for another 10 years to age 80 or 85. And this second 10-year payout can be higher than the first 10-year payout in order to offset the rate of inflation. Now, the third income bucket would only begin the payout if we make it to age 80 or 85. And this third bucket would be guaranteed not just for another 10 years, but for as long as we live, even if we live to be 120. And if we don't make it to age 80 or 85, our heirs will receive annual installments until all the money we put into that bucket is paid back out. Would you like to know how much more money you can get with an income bucket plan? Talk with the financial security professional or the retirement planning specialist who asked you to watch this video.